Swenson. He's our consultant, and we're happy to have you here. Basically, what we're going to cover is, and we're going to go over a little bit right now regarding our audio controls. Choose your Microsoft, your mic and your speakers, or you can also use your computer, your speakers from your computer. There's an option to dial. You can see it right at the bottom. For questions, you can submit your questions or comments via the question panel, and at the end of the session we will have a Q&A after the presentation is done. Our agenda today is about us. Then we are going to go over Microsoft Dynamics SL overview. We'll have a standard chart of accounts, the basics. Then we'll have why use sub-accounts. Then we have a large demo, accounts, sub-accounts, and reporting. After that, we'll have best practices, and finishing our agenda, we'll have a Q&A session for questions. Okay, so about us, MIG, we are experts in the implementation and support of leading financial and businesses applications from Microsoft. Our solutions are Microsoft Dynamics GP, Microsoft Dynamics SL, and Microsoft Dynamics CRM. We have been in business since 1998, and we assist organizations streamline their business process, and we help them maximize their productivity. Our certifications, we are a gold certified partner by Microsoft. We are recognized by the Microsoft as a, one of the ERP premier resellers. And we are also CEP, National Registry of CEP sponsors. So if one of you guys are wanting to get your CEP credit, please let us know. Send us an email, and we'll be happy to send you a credit. Okay, now we are going to go over the Microsoft Dynamics SL, and I will turn the session to Duke, who's going to conduct our demo.
We are seeing the other monitor.
All right, you're seeing the okay. Let me switch the screens then. How's that one? Is that the correct?
Great.
That's the correct one?
Yes.
Okay.
Yeah, that would be great.
Okay, good. Thanks for everybody for joining today, and we're going to be going through our chart of accounts and sub-accounts and some reports, and give you a chance to answer ask some questions. The first part is really what is the significance of the chart of accounts, and basically it's a unique register to classify your financial transactions. It provides flexibility in reporting and recording. It gives you a structure for managing your business with some uniformity. And setting up the chart of accounts is one of the first, if not the first, task you'll perform when you set up your accounting system, whether it's manual or computerized. A business needs and should want to know where its money is coming from and where it's going. Your chart of accounts is a tool for gathering and organizing this type of information. So it's very good for you to spend the time, look at your chart of accounts when you're setting up a new one, revisit your chart of accounts if you currently have an existing one, and spend some time and do it right. So simplify your chart of accounts. Using the chart of accounts, there's certain rules that you should probably follow. The chart of accounts should have the same number of characters. This uniformity in length also makes it easier for the financial folks and the developers of reporting units, so we can classify and put our transactions in and get our reports out the way we need to. If you have an existing chart of accounts, please revisit it inactivate those accounts that are no longer in use. The historical data is still there. You just make your account inactive, and it also gives you the opportunity to minimize the number of accounts that you have to actually reconcile at the end of the month. Implementing the chart of accounts is, if you haven't already done so, when implementing chart of accounts, keep the chart of accounts the same across all divisions. Make sure that you have enough room in the sections to add additional counts if you need to do it later. If you're a service organization, you may want to leave room in your accounts for inventory accounts just in case. Consider the current accounting and reporting needs when you set up your chart of accounts, whether it's legal or local reporting requirements, and keep it simple as possible. If you have different companies, use a company universal chart of accounts. It is easier for the accounting team and the reporting team to do their work. The chart of accounts, consider the chart of accounts design in segments, the mapping of the chart of accounts for the reporting requirements, and the end result is your analytical accounting. Your chart of accounts main focus is financial reporting. Keep the chart of accounts efficient, streamlined, and keep it simple. You want to enough reporting detail, but you don't want to slow down the transaction entry by having the chart of accounts too granular. So simple but informative. Presentation of the reports, reporting needs. What you put into the system is what you got as far as the reports goes. Look at your reporting requirements currently, and also consider your 5- and 10-year plans when you're setting up your chart of accounts, so you have enough room for modifications at that time. If you're going to add another division, or if you have to reorganize the current system, how are you going to be able to do that? Operational requirements to make business decisions versus financial reporting as required by the business. Your reports are all financial in nature, but some are used for business decisions within the operations, and the other is basically financial reporting to the board of directors or your stockholders. The features and tools of analytical accounting, transaction dimensions classify report, plus they also analyze the financial transactions based on your specific business needs. There are some wizards and Excel queries that you can use within the system that'll help you look at the data and give yourself the opportunity to make decisions based on the data that's in the system. Simplify the navigation. Make it easy for folks to recognize your expenses versus your operating expenses versus your cost of goods sold. Make sure that the accounts are in the right segments. Valid code combinations between your accounts and sub-accounts are available within the SL environment. If you want to use just restrict your balance sheet accounts to your main company sub-account, you can do that, but also keep in consideration how you're going to set up your budget. So if your budget is granular in nature, you want to make sure that your chart of accounts and sub-accounts are also granular in nature. So what I have here is a little diagram on the right. Dynamics has a sub-account that is a separate segment, a separate field than the account. In the chart of accounts on the right, here are some examples of what I'm showing here. So you'll see that the accounts listing are on the left and the sub-accounts on the right. So we can use the combination between the accounts and the sub-accounts to make to keep our chart of accounts simple, but also give us the reporting requirements that we really need. So if I have a cash account, I can post it to Division 10 to the company. I can also post it to Division 20 and to the 00 or the company department. So if I'm looking at my inventory, maybe we want to post our inventory to each division, whether it's Division 10 or Division 20. So wages, vacation, advertising, they have a little more granularity. So when I look at my division, I look at Division 10 versus 20, and I can book my wages to Division 10 G&A, Division 10 sales, Division 10 engineering, or the or research and development department based on that second segment. So it's kind of nice to see that we can keep the chart of accounts very simple, yet use our sub-accounts for the granularity that we need for our reporting requirements. So let's take a closer look here. All right, so what I have here is I'm looking at the chart of accounts, and I see that I've grouped my chart of accounts into different sections. I have my cash starting with the 1-0 series, my AR starting with the 1-1 series, and all the way down to the 1-2 series. What I want you to notice is at the bottom, you'll notice there are 5 accounts, 1, 2, 3, 0, 1, 2, 3, 4, and 5. Notice that they're 5 digits rather than 4. Now, to me, this makes it very difficult for my reporting requirements, because I have to recognize 5 digits versus 4 in some cases on my reporting structure. So what I would probably recommend that you do is, instead of putting 1, 2, 3, 0, 1, 2, 3, 4, I would go with the 1, 2, 4 series for the WIP. So you have 1, 2, 3, 4, 1, 1, 2, 3, 4, 2, 3, and 4, and 5. Keeping your grouping together for your WIP, yet you're keeping within the structure of the 4 digits on your accounts. If I look at another example here, I have 4 digits all the way down my sales and vacation pay, and I look down at my late charges, way down here towards the bottom. You'll see that there's 5 digits in here. It looks as if somebody was just trying to stuff that late charge somewhere in that section. Not a good idea to have 5 digits when your reporting structure looks at 4. It makes it much more difficult to manage and maintain your reports. I would suggest that you use the 1460 as the account for your late charges, instead of using the 41501. Keep your chart of accounts uniform, and your life will be much easier. In the sub-account structure, this is a pretty robust account structure. You'll see that I have 6 different segments. The first segment is the division. The second segment is my department that I'm going to be using. The third is a location or country. The fourth is a group within the country. And the fifth one, that single digit, is a region that I want to report on. Now, the reason I have so many different segments in my sub-account is because I need it for reporting requirements. Okay. Also, notice at the bottom here, in the ENs area, right in this section right in here, note that I'm also putting in events. So I can use my chart of accounts and keep it simple, yet I can book a sub-account for specific events. Maybe you have a new line of business rollouts that you want to capture some costs, maybe some marketing expenses and some brochures that you're sending out, maybe an event that you're hosting, in engineering developments, and maybe even a charity golf event. So just because we have structures such as 01, 02, 03, you can still use your sub-accounts for bucketing those expenses for a specific event. Okay. So when I look at my entry section into my screen here, this is a journal entry that we're going to be posting. Notice that I'm using two different fields. I have an account field and I have a sub-account field. So I'm reporting the transactions to the right simplified account, yet I'm using different sub-accounts. So if you'll notice line 2 and 3, I'm posting my account 1850 to both 00 and 01 sub-account structure, so I can post the transaction in a granular fashion. So when we look at some inquiries, this is an inquiry within SL that I can do. This is the account and sub-account summary inquiry. Notice at the top left-hand corner, you'll see the account starting with a 2, and I'd use a wildcard question mark. And I'm parsing out my sub-accounts to look at my units. I'm looking for my Division 01, and I'm giving me everything that's in the second segment, but just focus on my third segment, which is my country of AA. So when I do that and hit my display refresh button right up here, it gives me this listing of transactions that have come through by account. So these are the balances. If I want to drill into any one of these, I basically highlight the line and I hit my details button here at the bottom. And what it gives me is a little more details of what is actually transpiring. I should have showed you here. If I want to, any one of my screens that I want to print, up in the top corner here, you'll see a little Excel icon. If you push this, it'll actually move the information out of this screen into an Excel worksheet looking something like this. What's really nice about this is not only does it bring across the data, but it also brings across the headers as well. So it's easy for you to figure out what the data is supposed to look like. If you do want to drill down into account 2050 with that specific sub-account, you just hit your details button and it drives the transactions according to the periods that you're looking for. In this case, I have 8 different periods of posting. I have some transactions that I want to look at. If I want to drill down any further, what I'll do here is I'll just choose my line and then hit my details, and then actually drill into the transactions that happen for that particular month. And it gives me an idea of how did I get that $2,100 in that first line. You can run a report, or you can just use your inquiries to and looking at the accounts and sub-account segments, so you can get the analytics that you really need. Another way to use sub-accounts is by parsing out. You can use some filtering within your reports of SL. You can, under the Select tab, you can select the sub-accounts for just Division 1, or in this case, Division 3. And here I actually have a little template that's looking at my Division 1 only. So I can run a trial balance based on my 01. So here are all my accounts and everything that posted to my Division 1. So I can get an idea of what the balance sheet looks like, what the expenses look like, and I can get some idea really quickly by using my sub-account structure. I've kept my accounts quite simple and uniform, and I'm using my sub-accounts to give me that granularity that I need for either analytics or reporting. In my other reports that I'm looking at, I can segment the sub-accounts so I can compare divisions on the same particular report. In this particular income statement that I have, I'm showing in the first 3 columns each individual division for the month of July. I'm doing monthly totals so I can see how my business is doing as a consolidated basis versus year to date, and I have a last column giving me my percentage of sales or percentage of expenses. So what the opportunity here on the sub-account is not only the entry point of giving you the granularity, but more importantly, looking at the reports that you're going to need to analyze your business, both for decision making and for financial reporting. Some issues to avoid: too many general ledger accounts. Often we use, often when using like accounting systems like QuickBooks or Peachtree, we just keep growing. It just keeps growing over time. Usually the person entering the data is not a trained accountant, and when faced with accounting entries, it is not specifically described by the existing general ledger, so we'll just go ahead and add a new account. It really clogs up the chart of accounts. Too much detail in the selling and general administrative expense. You don't want to get too granular, but again, you want to keep it informative. Keep it simple, so the entry is quite simple, but also make sure that it is quite informative so we can report on it. Not enough detail in revenue and cost of goods sold. We want to look at our sales by line of business. So do we want to expand our revenue accounts so we can report accordingly? Same thing with the cost of goods sold. General administrative expenses, most accountants manage the profitability by controlling costs. However, if we create more accounts, we need to manage above the line versus below the line for gross margin. Cost of goods sold is not aligned with revenue. You got to make sure that if you're looking at your accounts in the revenue section, that you have a corresponding cost of goods sales account that gives you information. Now remember, when I'm looking at the revenue and we're looking at the cost of goods sold accounts, keep in mind that we also have a second field called a sub-account, so we can post revenue to different divisions and the cost of goods sold to different divisions if we need to do so. You want to make sure that there's logic within the general ledger account numbers, especially in the selling and administrative expenses. There's usually a standard for putting in your expenses. Some folks like to put it in alphabetically. Some folks don't. They just put it in as a operating expenses from the 6,000s to the 7,000s and so forth. And they just pop it in. Make sure that your titles of your accounts are descriptive of what the account is supposed to hold. That way, when we go to use those particular accounts to book an expense or an asset transaction, we're booking it to an account that has some specific information in it. No departments, product lines, or divisions may be tracked. This is where you could use your sub-accounts to take care of the departments and product lines. Rather than embedding it in your chart of accounts, you can put it into your sub-account structure and give you that still give you that granularity that you need, but keeping your chart of accounts quite simple. Okay. Issues to avoid. A chart of accounts does not need to relate back to a pricing model. One thing I wouldn't recommend is that you enter customer accounts into your chart of accounts. I don't think you want to be that granular. Using chart of accounts for job costing. This is a common way to misuse your chart of accounts because you're trying to embed the job costing granularity into your chart of accounts. What I would recommend that you do is use your sub-account structure to book your project accounting and job costing. No standard chart of accounts. Every company is different, but there is some basics that we have to adhere to. Usually your chart of accounts starts with the, the 1 series is usually your assets, the 2 series is usually your liabilities, 3 is your equity, 4 is your revenue, 5 is your cost of goods sold, something of that nature. So you just kind of go down the page and review your chart of accounts and make sure that when you put them in, it makes sense to the standards and norms that we have. Not using a numbering system is probably the biggest inefficiency that you can have. If you put letters into your chart of accounts, it makes it very difficult for anybody doing key punch entry to use the 10 key on the right-hand side and switch over to alpha. Combination of those things is usually not recommended in your accounts. Now you can use your numbers and letters in your sub-accounts to kind of give you a visual reading of what segment of your sub-account you need. So in the case I had before, your EVs were all your events. So I know that's just an EV event cost center that I'm posting my expenses to. All right, using not leaving gaps in my numbering in my numeric or numbering system. What happens is we get to the point where we make it 1201, 1202, 1203, and we need to insert some sort of new grouping in that section, and we haven't considered expansion. So what happens is we put in an account that's out of order or it's out of the group, and it makes my reporting process a lot trickier, and it makes my entry point a lot more difficult to put in. Best practices: segments should capture key areas of the business, and make sure that you're not only putting in the data into your accounting system as a transaction flow, but you're also getting the financial requirements, the financial reports that you need for your particular business. Segments should flavor the process of rolling up into a general grouping. So all my 1100s will be in my accounts receivable. So if I do 1101, 1101, 1102, it gives me that same grouping with for I can report my accounts receivable either in summary or in detail on my reports here. Chart of accounts should follow standard numbering systems. Example 1, start with the assets. That's what I talked about before. The chart of accounts should be designed to be flexible, to make sure that you have areas in your chart of accounts for potential future segments or potential future groupings. The number of the chart of accounts may expand over time. You also should look at your existing chart of accounts and see if any accounts that just haven't been used over the years, make them inactive so that postings won't go to those accounts, and it keeps that chart of accounts as simple as possible for the entry folks. The chart of accounts should be designed to properly be close to a segment. So it's a grouping of the accounts within the chart of accounts, but you also have to consider your sub-account structure and the segments that it's trying to represent. If you need to add another particular department or another division, it's as simple as adding another sub-account grouping. Instead of my 10 and 20 series, maybe I want to expand and go to I have a new business coming in, I'll call that business 30. So I still have the structure of looking at my divisions, but I also have my uniqueness of my departments for 100, 200, 300, 400, so forth. It really keeps it simplified. Creation of the chart of accounts should be based on reporting needs and requirements. What I generally do is work backwards. I look at my reporting requirements and then work backwards into how to generate my chart of accounts. Because if we put our transactions into an account, or a set of accounts that's not going to give me much flavor of the business, it really doesn't make sense to set up an account that's too generic. So if I'm looking for a revenue by product line, then I want to make sure that I have an account that has revenue by product line. Okay, we'll open it up now. Are there any questions that you have that you've been waiting to ask? Is anybody there? Okay. So one of the questions.
You can submit your question through the panel. Sorry, go ahead.
So I'll just start the session by a couple of the questions that I get about the chart of accounts. What's the best way to recreate or modify my chart of accounts if we already have history in them? Well, obviously, if you have history in them, you can't delete them because that would be against the accounting rules. So what you probably want to do is look at your chart of accounts, figure out where those little gaps are. If you have a chart of accounts that's already in existence, then what accounts are not being used, or which ones have never been used? A lot of times we have an account we set up but we never used, so maybe it's in this section that we can change the name of the account since it doesn't have any data in it, and it gives us an opportunity to fill resolve that question of how do I modify my accounts. It's much easier to look for gaps in your sub-accounts than in your chart of accounts. But when I look at cleaning up my chart of accounts, it's similar to cleaning out the rain gutters. You know, you don't want to do it, but you got to do it sometimes. And you just got to go through your chart of accounts, which ones are not really being used. And this is a discussion that you should have with all of your divisions to make sure that you're not going to be deleting or inactivating an account that they use a lot, but maybe you don't use it on your side. Another question I get is, can we change the sub-account structure, meaning the number of characters in the sub-account? You can change it to make it more within the parameters of your system. So if you have a 5-digit sub-account, which is 2 segments, you can actually expand it to 6 or 7 or 8, depending on what your licenses are allowing you to do. So maybe that gives you the opportunity to expand the sub-accounts a bit. What you'll do is the accounts that have been posted to the sub-account with 5 digits, they'll actually go to a 6th or 7th digit, maybe a 0 or a 1, 2, 3, or whatever you need to do. The third question that I get is, how can I see my chart of accounts in alphabetical order? Mostly in SL, when you look at when you pull up your possible values list, you can actually click on the header called description, and it'll sort it by alphabetical lettering, string from left to right. Some of our SL systems allows you to go into the top right-hand corner of your possible values and actually sort and filter based on the description that you're looking for. So if you're looking for rent, you type in RENT, and it'll give you all the accounts that have rent in that particular description. So setting up your chart of accounts in alphabetical order can be done, not usually done. It depends on how you want to see it. But I would use my reporting elements, my reporting, either management report or FRX, to sort my reported expenses in alphabetical order. That can be done within the financial reporting program that you have. Are there any other questions at this time?
Thank you, Doug. Yes, looks like we do have a couple of questions. So the first question is, how do we inactivate accounts and sub-accounts? That's the first question we have.
Oh, well, if you go into your chart of account maintenance screen or your sub-account maintenance screen, and you select, if you look down your list, you'll look at a list of your accounts, and over to the right-hand side, you'll see a column that says active, and it'll be either active or inactive. You just go in and change the value of that account to from active to inactive and save it. What the nice thing about that is once it's inactive and you use your possible value list or your F3 key on that account when you're doing transactions, the list that you see there will only be the accounts that are active. So it minimizes the opportunity to make errors and put them in the wrong accounts.
Okay, great. And we have the last question. What about the trees?
The trees, yes. If you do have a series of trees in your management reporter or your FRX reporting package, the trees will have to be redone if you expand your sub-account. You're going to have to redo those because it's looking for a specific number of digits. So you'll add another question mark to your structure when you're calling that particular sub-account. It's probably better. It's always best not to change your sub-account structure if you can, just because it's a structural thing. More often, folks will actually keep the same structure but use different elements within the segments and give yourself a different opportunity for reporting on different business lines or whatever. Does that make sense? Was that the gist of the question?
Looks like we just have another question.
Mm-hmm.
Yes, looks like, Duke, thank you. Looks like we do have another question here.
Okay.
What if you need to merge one company into another one? There's one question there.
If you need to merge them.
Yeah.
Well, there's two ways.
I'm sorry, can you bring the history of the subledgers into Great Plains as well?
Well, if you need to merge the two, usually we do it on a consolidated basis. What I'm understanding the question being, if I have two different charts of accounts, how do I get them to combine into a reporting in a report? Well, you can use consolidations. So you would have a parent company that would receive the transactions from each sub-reporting unit, sub-reporting database. So it's more of a consolidation, and you'll just drive that into your financial reports. So I'd use a consolidation on that point. There's another in management reporter and FRX. You can use your tree to pull information from different units or different databases, but you have to make sure that if your structure is different and you're looking at the different accounts, say your 1100 in one series is cash and 1100 in another one is accounts receivable, you're going to have to use your row definition to call out that particular account or accounts in that grouping, so that when it goes against the different entities, it pulls the data and groups them correct for your reporting elements, your financial reports. Any other questions?
Okay, great. Yeah, any other questions? We'll wait a couple of minutes, one more minute. So, looks like we don't have any more questions. Yeah. Thank you, everyone.
So the last item I would like the audience to think about is, the chart of accounts seems to grow over time, and very rarely do we step back and say, do we really need those accounts, and are we actually using them for any type of transactions? Go back and visit those and make those inactive that you aren't going to be using, so the accounting team doesn't have a lot more workload reconciling the accounts at the end of the month. All right. Well, thanks everybody for joining us today.
Okay, well, now we want to move forward with the MIG support plans. So MIG support plans are reliable and consistent support service programs for businesses that are running Microsoft Dynamics. So some of our support benefits include Microsoft support with Microsoft Dynamics products, support with any related third-party add-ons, and fixed rates plans as well. If you guys have any information, please feel free to contact us at info@mig.com. For training, so MIG offers training for different options, so various training options. And they're available with our support plans, and we have also group discounts. And if you guys need more information, again, feel free to reach us. At the end of the webinar, there's going to be a survey that will appear. The survey is designed to help us evaluate and improve our webinars, so please take a few minutes to provide us with some feedback. Thank you very much for taking the time to be with us today. Have a great day.